Hey, everybody, I'm Zach.
And I'm Jesse.
You're watching Disruptive Investing, and Fisker is in trouble. First off, disclaimer, we are not financial advisors. Are you a financial advisor?
No, haven't passed that test yet, huh?
So don't take our advice for buying stock. Do your own research. Investing is risky. Oh, Fisker, you know that we love all electric car manufacturers, but you also know that Elon said that mass producing EVs at scale and profitably to boot is one of the most difficult things a company can do. So is it any surprise now that Fisker Incorporated, or FSR ticker symbol, has released their Q4 earnings report that things don't look so good for Fisker? Now, this isn't a full earnings report. Fisker said they need more time to file their 2023 Form 10-K.
They need more time? I mean, is this like a high school book report? Like, oh, teacher, I just need a few more days to finish my report. I was having trouble getting my printer working.
Actually, it kind of sounded like that. Fisker said in their press release, the company, quote, needs additional time to finalize its consolidated financial statements, finalize the assessment of its internal control over financial reporting and related disclosures, and complete its procedures for the 2023 Form 10-K. Fisker said they expect to file that by March 15th.
So what do we know?
Well, first of all, Fisker announced last Thursday a 15% workforce reduction. Now, keep in mind that Fisker doesn't make the Fisker Ocean. Remember, the EVs, of course, are subbed out to Magna Steyr in Austria for production. So I'm not sure exactly what Fisker's approximately 1,000 employees actually do or which departments they're cutting. Fisker is cutting employees because they're quickly running out of cash to pay them. Fisker only built around 10,000 vehicles in 2023, and worse, they only delivered 4,900 of those to customers. Fisker's stock fell 33% after hours once that press release came out. Fisker's founder and CEO, Henrik Fisker, said, quote, "We recognize that the EV industry is going through a turbulent period."
And that really bugs me because, no, it's not. If you want to be accurate, say that Tesla is such tough competition. Yeah. That would be more accurate.
Yeah, I mean, EVs are selling better than they ever have. It's just that most of those EVs are Teslas. So, Henrik, don't blame your company's problems on consumers.
Well, it's those pesky consumers choosing Teslas. That's what leads to the EV industry being so hard. And Henrik Fisker is not the only guy saying this. Now, didn't Fisker cut the price of the Ocean SUV?
Yes, they cut the starting price to just under $39,000. Fisker says they plan to launch the Pear crossover, which they say will start under $30,000, and also launch the Alaska pickup truck.
So Fisker's running out of cash.
Yeah, Fisker ended 2022 with $736 million in cash, and now they've ended 2023 with just $325 million in cash. See, the idea of contracting Magna Steyr to make their cars might seem smart. We've talked about this a bunch. It keeps them from having to build a factory and hire and train all those employees and robots, etc. But shipping the cars to the US is not cheap or fast, and Fisker has only 8 dealerships here in the US to sell and deliver those cars. Henrik says he wants 100 more by the end of the year.
Also, because the Ocean is made, well, across the ocean, it doesn't qualify for the $7,500 federal tax credit, putting Fisker at a huge disadvantage to Tesla. You can get $7,500 off the Model Y right now, right off the sticker price. So what were the Q4 revenue numbers like for Fisker? Do we have those yet?
Yeah, we have preliminary Q4 numbers. They're not so good. So you got $200 million in Q4 revenue. Now, that is an increase from Q3's revenue of just $72 million, but Fisker says their gross margins on their cars are minus 35%. So we've talked about this before. If you sell something at a loss, then the more you sell,
the worse it is.
The worse it is. That might be one reason, I believe, why they only delivered the 4,900. I believe it's because they're screwed one way or the other. So here's their 5-year chart, and this doesn't have the Q4 numbers in it yet because they're not official. And I want to thank MainStreetData.com. You can use our link if you want to save 10% off their premium subscription. You get these awesome charts and many, many more that you only get under premium so that you can really visualize the company. And I mean, it really helped me to take a look at this 5-year chart to see oh, okay, you get the normal, losses that you get with a company. And this has been the first couple quarters where you get to see some decent revenue.
So with negative margins, what is Fisker going to do?
Well, I'm sure that's what caused them to do the 15% cut in employees, but I doubt that will be anywhere near enough. And that is why they had to disclose this. They said, as a result, the company expects to conclude there's substantial doubt about its ability to continue as a going concern when its annual financial statements for the year ended December 31st of 2023 are filed with the SEC.
So that's not good.
No, it is not. Yeah, this is something you have to tell the SEC. You have to disclose it as soon as you know it, that basically you are in financial trouble. And basically, Fisker is trying to raise more capital from note holders, banks, and other big investors. But even if they can, their runway is really short. I mean, even if they can sell the 20 to 22,000 Oceans that they just said they can sell in 2024, and by the way, that's a downgrade from what they said earlier, they're relying on being able to raise prices. How can they do that with Tesla willing to cut theirs? I mean, it was a brilliant move by Elon. Tesla cutting their prices, do you remember? It brought all this FUD from analysts and legacy media. Oh no, Tesla is cutting heavily into their profits. But Tesla had and still has good profit margins even after the cuts, whereas Tesla's competition was slaughtered by the price cutting.
I would really not be surprised if this is the beginning of the end for Fisker. I mean, we've been saying since the beginning how Fisker wasn't that bad, but Tesla is just so much better.
Yeah, I mean, Fisker's an EV company. I love EV companies. I think the car looks pretty cool. And I think if this car had come out a few years ago, and if they had kind of done a lot of the things Tesla had done, right, build out a supercharger network, had some stores, service centers, and so forth, and built up their brand. But don't forget, Fisker started another company 10 years ago that went bankrupt. So that doesn't help his brand. And I also think when you're buying a car from an unknown car company, those are only certain types of people that are going to do that. Right? Most of us that need service and stuff like that are going to buy from a company we've heard of before. And Fisker doesn't have the deep pockets that Lucid has with the Saudis or that Rivian has with Amazon money. So if they need to raise money, they're relying on a very small group of investors at a time when people don't have a lot of spare cash laying around. So I think that adds to your argument that they're in trouble. Again, disclaimer, we're not financial advisors. Don't take this as what you should invest in. But looking at their stock chart here, if you're looking at this stock chart and thinking, Fisker is attractively priced with a market cap of just $258 million, I think you might want to think again. Fisker has an incredibly tough climb ahead of it, and that's if everything goes well on the macro side. The Fed lowering interest rates a bit this year might help bring down car payments a bit, but you have to ask, now that Fisker has sold 5,000 cars to its biggest admirers, is there really going to be a demand for the Ocean going forward when there is no federal tax credit, no real service, and now the threat of Fisker going under? So let us know what you think in the comments. Again, I think it's great that this car, the Ocean, is pretty well priced, but I think that Fisker doesn't really have a good game plan going forward, and I think this is going to require all of Henrik Fisker's showmanship to try and get out of this mess, and I just don't see how he's going to do it. And I mean, again, everyone wants to kind of compare all of these, pure electric EV companies to Tesla, and they're going like, well, look at Tesla back when they were in the same position. Except that when Tesla was in this position, they weren't competing with Tesla. Right. They're competing with the Leaf.
Tesla was basically, if anybody wanted an electric car, there was the Leaf and there was a Tesla Model S, right? That was it. Yep. And so that allowed people to go, do I want to have 70 miles of range or do I want to have 200 and something miles of range?
And I just want to point out, when BMW came out with the i3, that to me is equivalent here to Fisker. It's like, but here's the i3. And so consumers went, okay, suicide doors and stuff like that, but only, 60 miles of range. So you can keep coming out with these cars, but they are going to keep comparing them to Teslas. And there's just no way that the Ocean compares that favorably to the Model Y. But let us know what you think down in the comments and whether you would go for a cheap Fisker.
Thanks so much for joining us. We'll see you next week on Disruptive Investing.